Question 17. Are taxes dischargeable in bankruptcy? First, let's recognize the obvious, that the most ferocious bill collector in the world is the IRS. However, bankruptcy can deal with the IRS. I have found that the IRS staff to be very professional and knowledgeable about their subject. Indeed, the IRS is, in one of its publications, informs the public that taxes can be discharged in bankruptcy. So yes, it is possible to discharge taxes in bankruptcy. Many CPAs and attorneys believe that taxes simply are not dischargeable in bankruptcy. Now, having said that, taxes are dischargeable in bankruptcy, I will briefly outline what taxes are dischargeable and which taxes are not dischargeable, and when they're not dischargeable, what can bankruptcy do to alleviate a tax burden. Again, I have to remind you of the preface to this videotape, that you must consult an attorney and not rely on this information. I'm trying to inform you about bankruptcy. I'm not trying to represent or give advice about your case. Discharging taxes in bankruptcy is, in my opinion, a real specialty which I've developed, and the subject must be approached with great caution. First, income taxes owed to the IRS or state of Connecticut are dischargeable, provided they meet the criteria as follows. 1. You have to file your tax returns. 2. The taxes have to be over 3 years old. 3. The taxes have to have been assessed within a certain time frame of filing. And 4. There can't be any fraud on your part. Under these circumstances, IRS and state income taxes are dischargeable. I am deliberately not going into great detail with this information because of the complications in trying to explain how it works. For example, what happens when the tax is dischargeable, but the IRS has filed a lien against your property? How does that work, since I said before that liens pass through bankruptcy? Can the IRS lien be attacked with a 522F motion? The answer is no. Second, taxes which are not dischargeable in bankruptcy are as follows. Trustee taxes or withholding taxes, payroll taxes which you should have turned over to the government. Sales taxes are usually not dischargeable in bankruptcy. I have represented numerous people who have used Chapter 7 to discharge IRS debt. One case, the person owed over $150,000, and we successfully obtained a discharge of that debt. In the past, before President Bush changed the bankruptcy law in 2005, we could pay off taxes in Chapter 13, which were not dischargeable, with no interest running on the tax debt. So for the most part, the money went to pay on the entire debt and not just on the interest. After 2005, we have to pay 18 to 20% interest on the outstanding tax in the Chapter 13. Now, there isn't much incentive to use a Chapter 13 to repay taxes through the Chapter 13 plan because the government wanted its pound of flesh. And the result is that I believe that there are far fewer cases in Chapter 13 where people are trying to repay their taxes. The expression, "he got his pound of flesh," reportedly comes from the Roman Empire, where it was a crime not to pay on your debts. And if you didn't pay your debts, the creditor could obtain a pound of your flesh in satisfaction of the debt. Finally, regarding taxes, one word about local property taxes. Property taxes which are more than 1 year old prior to the date of filing are dischargeable in bankruptcy. However, there's an argument which has not been tested here in Connecticut that property taxes have an inchoate lien and therefore not dischargeable in bankruptcy. And then there's the problem when a tax lien is filed on your real estate. But car taxes, which are more than 1 year old, are dischargeable in bankruptcy, and when you go to register your car, you don't have to pay those taxes and can't be forced to pay them. Saying that, I have found numerous times when a clerk at the MVD doesn't understand this, or the town tax collector doesn't understand this point of law, and we've had to help the clerks be educated, or the town tax collector.